Hey friends, welcome back to the Pro Organizers Coach podcast. On today's episode, I have a special treat. I have Danielle Hayden. She is a CPA, an accountant that came to do our guest workshop inside of the Pro Organizers Group coaching community. So, what does this mean for you? Well, for you, you get to hear the main part of workshops that I'm doing inside of the community. The difference for my women that have joined the membership, they actually get to do a live Q&A at the end of each workshop of whoever I have as guests that are coming on in the future. The workshops that I have set up where a guest is going to come teach their specialty to our women and do a live Q&A afterwards. I have Jennifer Henry doing time management. I have Lauren Litt doing that IG Life where we're going to talk all about Instagram as a professional organizer. I have Tracy Beavers coming in to do email marketing and promoting on our socials. I have Maddie Mackey coming in to talk about SEO and Google. Then I have Ramonica coming in to help us with being on video and being confident on video. I've got Claudia Williams coming in to talk about self-care as an entrepreneur. I've got Rataja Brandy coming in to talk about social media strategy, specifically a whole year's worth of content and how to set up your strategy as a professional organizer. And then I also just got Jessica Babaron, who's going to come in and talk about Facebook ads and the strategy behind that specifically as a professional organizer and how to use Facebook ads for your local area. So I hope that this has helped you understand how much value I am bringing into the group coaching community, and that each month there is the guest workshop, and that I'm working very hard to make sure those guest workshops are super valuable and that they help us in our organizing businesses. Today, the reason that you get to hear some of the Q&A is because it turns out when the accountant came on, Danielle Hayden, she decided, hey, why don't we just do a live Q&A for the entire hour? And every single woman can ask any questions that they have about what they need from a CPA or for their business, any questions they've ever thought of. So all of the women that were in the membership got to come to this live group with this accountant and get all of their questions answered. By the end of it, no one had any questions left. So I am taking a portion of that hour and putting it out as this podcast episode so you can hear some of it. And hopefully that helps you in your organizing business. And moving forward, if you are interested in being there for a lot of those workshops that I just talked about, make sure you come join us inside of the group coaching community. You can always go to proorganizerscoach.com to reach out to me and ask how, or the links in the show notes below. Come join us. That is a business write-off that is so worth it, and we would love to have you in the group. Without further ado, let's get on with the episode. I hope this blesses you in your business, and we will see you in the next one. Enjoy. Hey friend, you are listening to the Pro Organizers Coach podcast. I'm your host, Samantha Brown. I'm a professional home organizer, decluttering specialist, and business coach. I created POC to empower you to reach new heights in your business. Through insightful interviews, expert guidance, and actionable strategies, we will equip you with the tools that you need to excel. This podcast is not just about tidying up spaces. It's about building a supportive sisterhood of passionate professional organizers. Whether you're a seasoned pro or you're just starting out, this podcast is for you. So let's do this. So I will ask for Trista while everyone else kind of thinks of their stuff, just to give you some topics. And then Jen's here, so I'll let her kind of ask her questions to you too. But Trista was wondering, can medical expenses be written off, like insurance premiums and copays?
So it depends. Let me ask a few questions.
Yeah.
So how many of you are structured as an LLC? How many of you are sole proprietor? How many of you are an S Corp? How many of you have no idea what I'm talking about?
I would say that the percentage is no one's S Corp. It's probably 50-50, like LLC and then sole proprietor.
Okay. So as an LLC, your health insurance and medical expenses are a tax deduction. It's really important as an LLC that we have our business and personal expenses completely separated. And so you'll want to pay all of your insurance premiums and expenses through your business checking account and then record them in your accounting software as a business expense. And then that will flow through to your personal tax return.
One question I have though, but if the insurance that you have is supplemented through the government,
it is not a tax deduction then.
Okay.
So if you are going to the marketplace for your insurance and you are getting that discounted plan, then you can't double dip.
That's what I figured. Okay, thank you.
And I have a list for you guys of all the tax deductions. So we'll get through all the questions and whatnot, and then I will give you guys kind of a PDF of all the tax deductions that we see most commonly when we work with our clients. So when we work with our clients at Kickstart, these are the most common expenses that we see over and over again.
So that was for the LLC though, right? So if you're a sole proprietor, is it different?
So sole proprietor versus LLC is only a legal separation. It's really not a tax separation. So if you are a sole proprietor or an LLC, it doesn't make any difference from a tax perspective. When you are a sole proprietor and you become an LLC, you then are giving yourself legal protection. You are, I had somebody say to me recently, imagine as a sole proprietor, you're one bubble. So if somebody sues you or comes after you in any way, shape, or form, they're attacking this whole bubble. They're taking everything you have down, your home, your vehicles, any cash savings, stocks, like that is all part of one bubble. When you become an LLC, you are becoming two bubbles, so they can only pop one, right? So they only have access to sue your business assets, not you personally and not your personal assets. So that is the only real difference between a sole proprietor and an LLC. The tax difference comes in when you become an S corporation. So as you continue to grow your business and you decide that you're making around $50,000 a year in net income, that's when you become an S corp and you start to pay yourself on payroll as a business owner. And at that point, it changes the tax structure. Does that make sense?
Yeah. That's kind of my question to everyone, right? Like whenever they're like, should I do sole proprietor? Like it matters what state, because some states charge you a buttload to turn into an LLC. Well, do you have homes? Do you not? Do you have cars? Do you not? Like, where are you in your life versus how much is it going to cost to do that? Or should you at least just go ahead and start, see kind of in your first year how things go? Do you even like to do this as a business before you like go that whole route? But I do 100% see what you're saying of like the differences of where it gives you the legal protection. And what I've also heard for everyone that's new, because we've got a few new people, is that with QuickBooks, you also don't want to use QuickBooks for the invoicing part because it will then create a double account. So like for every time that you invoice someone, it almost shows as two jobs and it can mess up their system. So you want to use QuickBooks for your accounting to pull everything together, but you want to have the HoneyBooks or something else as your invoicing system.
I almost never hear that advice. And I am like inside of me, I'm like, yes. So, QuickBooks Online is not the best invoicing tool. We love HoneyBook. HoneyBook is fantastic. FreshBooks, any of those outside invoicing platforms, they are amazing at what they do. Now, I want you to be careful because if you sync it with QuickBooks and then you don't apply the payments correctly, you can still end up with that double entry and duplicate your income and end up filing your taxes with double the revenue. So obviously, I say this as an accountant and as a bookkeeper, just make sure that you have a team that is helping you either with the bookkeeping or reviewing your bookkeeping so that you're ensuring that nothing is duplicated and all of those payments are applied correctly.
Yeah. And kind of the advice that I give them, which I had never thought of until I ended up doing it myself, to actually interview a few people for who does your taxes and find someone that you actually like can trust and can because the thought had never crossed my mind. It had always just been, oh, look someone up on Google, pick somebody, go to them kind of thing. And I almost felt trapped once I picked that person and did like an interview or a consultation. And then it hit me and I'm like, this is not the person for me. Like they didn't take the time to answer my questions. Like there was just a lot, the flow wasn't there. And so a lot of times I tell the girls, like, you can interview people and take the time to find someone, because then on the back end, you've got that person every year that you're like, oh, I have a tax person. Like, they just handle this stuff. Yeah.
And here's the other thing, like, don't hesitate to switch. Unfortunately, and I say this with love as somebody who is part of the industry, the tax industry is just as broken. Tax accountants went to school to do taxes. Like, that's it. They weren't taught how to run a business either. And I think we have this higher standard or this expectation of tax accountants that they never got that schooling. So the only expectation we can have of them is that they are going to be able to file our tax return. They might not run a business that you enjoy working with. So if you don't like working with them, then stop, right? Like, find another accounting firm, and it's okay to switch. It's not as big of a lift as you think. We have clients who move to our firm all the time. That's why we have an onboarding team that walks our clients through every step of the way, because it can be really overwhelming. And so find a team that you like their personality, you like working with them, and that they have a team of support. So again, a lot of tax accountants might just be an individual or an individual and assistant. We have an entire team of people who we work with. So we have an operations team, we have an onboarding team, we have a team of bookkeepers and CPAs. So depending on what you need at this stage in your business, we have a full team of people to support you. But find a company that matches your core values of who you are and that you're going to want to call them. Your tax accountant should be somebody who you want to talk to. You want to email them. You want to ask them questions. It should not be a transaction. I hear too often that people are not hearing from their tax accountant other than at tax time. And we really want to talk to our tax accountant throughout the year. So if they're doing your bookkeeping, you should be getting monthly or quarterly bookkeeping financial statements from them. If they're tax only, you should be meeting with them in the summer and then again at Q4. Your tax accountant should be available to answer questions for you. When we work with our clients, we review the return. We talk about tax strategies, and we meet with them 4 times a year. So you really just want to make sure that you have that partnership with your tax accountant.
Yeah, instead of just trying to guess or sitting there stuck in it and spending months and months and months just stuck.
Is it better to do quarterly, or was it better to just do it at the end of the year?
You're talking about tax payments, the bookkeeping?
Doing taxes every quarter instead of waiting until tax time.
Yeah. So I absolutely recommend. So I'm gonna call it like best case scenario. Best case scenario is that we're doing our bookkeeping weekly and looking at our financial statements monthly. So really, we want to, as business owners, so I'm a business owner too, as business owners, we have a responsibility to operate our business and to be able to make business decisions that are going to set us up for success. And so in order to do that, we need to have access to the numbers. So having bookkeeping that's done on a regular basis, and an ideal situation is that you're looking at your financial statements monthly. And at the end of each quarter, when you're reviewing the books at the end of each quarter, you'll do one of 2 things. If you worked with a tax accountant last year, your tax accountant should have given you what we call coupons. And that gives you the amount that you should pay on estimated taxes. Estimated taxes for 2023 are based on what your income was in 2022. So you should have that amount from your CPA when you filed your taxes last year. Now, you can pay that amount into the IRS. If your business is doing better in 2023 than in 2022, you don't have to pay that money into the IRS right now. You can save that money. You can put that money in a high yield savings account, and you can hold on to that money until tax time. And then you'll file your actual tax return at the end of the year.
Yeah, well, and I always recommend, especially when they're getting started, and I hope that this is correct, but kind of what you said about the savings is the percentage. And I know that it's different for everyone, but I know especially my first year when I did not know my numbers whatsoever, like you're saying, based on last year's numbers. Well, if you don't have last year's numbers and you're just getting started, then like the kind of go-to number is like 35% of every to 40. I did 40 because in my mind, I'm like, I'd rather have extra money at the end of the year and be like, woohoo, vacation or something, than to all of a sudden owe a bunch of money and not have it set aside. And so for me, I was like, I'd rather do the higher number. So I went with 40% the first year that I wasn't sure what my taxes were. Put that in savings on every job. So for every $100, $40 went into savings all throughout the year, which was a really nice thing to have at the end of the year. But it helped me feel prepared for tax time the following year and not feel like, oh my gosh, I'm not going to be prepared come tax time. I'm not going to have the money. I'm not going to whatever. And so when they're first starting their business, is that good to do?
I love that. So,
okay.
Especially if you don't have an accounting software set up yet, take something off the top and put it into a savings account. You want to have that money. You have a responsibility to pay for the taxes on it. 40 is high, but 30 might be a little low depending on your other deductions. If you're being detailed and keeping track of all of your business expenses or not. So if you are not keeping track of all your business expenses or you have very low expenses, then you'll want to save more off of your sales. If you have higher expenses, then you can save a little bit less. Technically speaking, when we look at the tax, like a rough tax reserve, we look at 25% of your net income. What that means is looking at your income statement. So it's just sales minus all of your expenses. It's 25% off of that number. So that's what I'm saying. Like 40 is a little bit high, but to your point, you'd rather have it saved. Once you get to a point where you're like, okay, I don't have money to invest in my business. I am scared to pay myself. I'm afraid to hire. I'm not making these other business decisions because I'm scared of my taxes. That's the moment where it's time to get some help in your business and to start to look at the numbers throughout the year, because you don't want to hold yourself back. Like, my passion in the world is watching all of you succeed. Like, I freaking love entrepreneurship and I love watching businesses grow. And so as we grow, we don't want to oversave in taxes and then not make an investment in our business, like not hire that person, not buy the coaching program, not buy the court, right? Like, we don't want to sacrifice growing our business for the damn IRS.
Well, and I love that too. Like, when I was saving that 40, I also then, if there was something like coaching or something that I was like, I know to better my business, to better myself, like I got certified as a life coach, I paid for that out of that 40%. So I guess I should say that, because to me, that was something that was like, I'll make the payment at the end of the year if I have to, but like right now I need this and the money's sitting there. I wouldn't have done it had it not been kind of exactly what you were saying of like, I'm stuck right here. I'm not really sure. It's my first year, but I know I really need this thing and it's going to help me get more clients type thing.
Yeah, but we don't want to spend everything, because there's a shiny object syndrome that happens in new businesses too. So we want to have a balance of not letting our money mindset keep us from investing, and balance that with taking the risk and growing our business and knowing that we'll work it out at tax time.
Absolutely. I love it. Hey friend, are you getting stuck in the challenges of launching or growing your business? Do you feel overwhelmed by all of the things that you think you quote unquote should be doing? Girl, I have been exactly where you are, which is why I am now offering Unstuck coaching sessions. For just $77, you get 60 minutes of one-on-one personalized support and the expert guidance that you need to navigate your way to success. Don't let obstacles hold you back any longer. This coaching is the answer you've been searching for. Are you ready to know exactly what your next steps are? Book your session today and rediscover the hope and clarity that you need to thrive. Go to proorganizerscoach.com or click the link in the show notes, and I will see you there. Okay, so the first question was, what forms do we need from our accounting or bookkeeping software to do our taxes? For example, P&L, ledger, etc.
At the end of the year, you will use your income statement and your balance sheet to file your taxes. So from your accounting software, you'll need, most importantly, your income statement. If you're an S Corp, it's also very important that you have a balance sheet as well. So whatever accounting software that you're using, you should always have a option to run the profit and loss statement, also known as the income statement. So if I flip-flop those two words, profit and loss equals income statement, it's the same thing. I just tend to flip-flop them. So when you run that report, you'll run it for 1/1 to 12/31. And that is the information that you'll give to your tax accountant. If you're working with a bookkeeper already, they should be sending you reports throughout the year, and then they'll send you that report at the end of the year. Pro tip is whatever accounting software you're using, to make sure you use the button called Reconcile. The Reconcile button is in QuickBooks Online. There's a reconciliation button, and the reconciliation button is QuickBooks' way of ensuring that you have included all of your income and expenses. It doesn't mean that they're accurate or they're put in the right places, but it ensures that everything has been included. We have, more than any other year in history, have seen QuickBooks duplicate transactions this year. I cannot tell you how much time my team and I have spent deleting transactions out of QuickBooks, because they, FreshBooks did this too. They started the bank feed and brought in all the transactions again. So the reconciliation feature is going to make sure that nothing is duplicated. And that's how you'll make sure that your income and your expenses are not duplicated, or that you're missing something.
So it's not going to, like, now, if I hit that reconciliation button, though, because as a professional organizer, the way I teach my girls is every single time you do a session, to make it easy, it's like it's a certain price every single time. So to QuickBooks, it's the same numbers over and over and over again coming in. So that won't matter, because each one has its own number, like transaction, etc. Correct?
So in QuickBooks, I know we're getting into the weeds, so bear with me, guys. In QuickBooks, if you're doing your own bookkeeping, you'll go to the banking tab, and there's a bank feed. And in the bank feed, that's where you're categorizing each transaction. So all of those amounts that are coming in that are the exact same amounts, you just need to put them to the right place. The reconciliation feature is making sure that if you had $400 coming in 5 times on 9/12, like, did you really have 4 clients? Or did the bank feed duplicate and you only had 2 clients, but the bank feed duplicated them? Or PayPal and the bank feed both synced with your system, and now you have double the transactions.
Yeah. And honestly, like, the way that I also have tried to teach is that, like, ideally, like you were saying, go in like once a week, every Saturday or Sunday, whatever that day is, go ahead and put each thing where it is. Like, it's income and it's this and it's
Yes.
Because
every week.
Then you're good every week, and then you don't have to worry about it.
Every week is the best approach. Do it weekly, and then run your income statement at the end of each month and look at it, because when you look at it, you're going to see, does this even make sense? Like, no, I didn't spend $2,500 on office expenses. And then you can look in and figure out why. Like, why did it tell me that?
Yeah. And the more we have our numbers, like you were saying, it keeps us from getting stuck, where it doesn't become this big, huge mountain that we don't know what we're looking at the end of the year come tax time next year. And so it just keeps us from getting stuck. Okay. So her second question was, how do we know if we should be paying quarterly taxes to the IRS or just doing them all at once with our personal taxes? Now, I guess kind of back to what Kristen was asking, how do people decide which they want to do? Is it just preference, or does the IRS decide? I've never fully understood that either.
The estimated payments are different. The estimated payments are, you're paying ahead for 2023. So your estimated tax payments is so that you're paying into your tax return that you will file in January 2024.
Yeah, so if you're not doing the quarterly estimated, it's not like you're going to be penalized in any way. It's just that people will do quarterly so that they kind of have it set aside ahead of time, and they're not worrying about having a big lump sum at the end and forgetting to save it, kind of thing.
If you had a large tax liability last year and then you didn't pay this year, there'll be a small amount in penalties and interest. So it's when you're profitable, the IRS says, I'm not waiting for my money. I want my money now. You know what I mean? So they want the money during the year, because imagine if you were an employee, you would be paying that money into the IRS throughout the year. And so the IRS is saying, okay, small business owners, self-employed people, you don't get to wait for the end of the year. I want my money throughout the year. So the estimated tax payments are only if you had a profitable year last year that you're paying into your tax return for the following year.
And so we can ignore what it says on QuickBooks, where it says estimated quarterly payments or whatever that QuickBooks is showing us.
I would definitely ignore QuickBooks, especially if you're doing your own bookkeeping, because if you are not, like, what if you didn't know that you were duplicating your sales? Or what if you were putting things to owner's draw that are really a business expense, or vice versa? I don't ever, like, it breaks my heart. I have seen clients, we had this lady who we were working with that she overpaid so much money to the IRS. She was doing her own bookkeeping, and she thought that she needed to pay this money into estimated taxes from the IRS. She paid them so much money. It was crippling her business, but QuickBooks was telling her that she needed to do it. Well, once we got into her books, so when we did her bookkeeping, we did what we call a catch up, where we organized the whole year. When we did the catch up and we saw that everything was going to the wrong accounts, she actually didn't owe any of that money. She had a loss in her business, and she had to wait to file her taxes to get the refund back from the IRS.
Oh, yeah, let's not do that. That's why I wanted to verify, because I know, like, I could see it in my mind where QuickBooks does that. They put up that little thing, you know, like at the top of self-employed one, it says like estimated quarterly taxes or whatever. And I was always just wondering, like, and so you've explained it very well. So I just wanted to make sure when people see that, because it's always at the top of your screen when you're on QuickBooks. Yeah. Oh, yeah. So Jada, the coupons,
old school term, coupon, but email your tax accountant and ask them, like, they should tell you exactly how much you owe on each of the dates. So
and if you didn't get them, then you didn't, like, you don't have to worry about it.
Yes. Well, most likely, if you didn't get one, then you probably don't have to pay estimated taxes, but double check with your tax accountant, because it depends on the kind of accountant you're working with. So make sure you talk to your tax accountant. So if you have a tax accountant who is a little bit more transactional, where you're just sending in your forms, they're doing your return, they're just sending you the return when it's done, and then I would email them and say, hey, can you confirm when you did my tax return last year, do I owe estimated payments?
So the third question she had was, I've always done my taxes myself with TurboTax. Now that I have a sole proprietorship, can I continue doing it this way, or should I should you hire a CPA? Yes, I can already. Yes, the answer would be yes, correct?
Yeah.
And then I guess I'm asking is, at what point in your business does it get too complicated, and do we need to outsource?
So I believe that every business owner, especially women, deserve access to this financial information. So the way that we do our pricing at Kickstart Accounting is that we tier our pricing. So if you are a startup and you are just your first year in business, or you're still building your revenue, your pricing matches that. And as you grow, you're not paying the same amount as somebody who is bringing in $500,000 or $250,000. You're paying what your business is bringing in today. And And we do that because we want every business owner to have access to bookkeeping and accurate taxes. So my answer in an ideal world is that you're never spending your time doing taxes or bookkeeping. Like, do you enjoy bookkeeping and taxes? Like, do you enjoy your afternoon that you spend in TurboTax? Probably not. And so
No.
go spend the afternoon with your kids. Like, go spend the afternoon with your family. Go do something with your life. Go build your business. You know, like there's so many other things in your business that only you can do. So spend more of your time in your zone of genius. Look, I can't do what you guys do. Like, seriously, I admire what you guys do. I cannot do it. And so we all need each other because my zone of genius is not yours and vice versa. So I always tell people from day one, get it off your plate, go work on your business, spend the time with your family, and start building a business that allows you to do that.
Yeah, I love it. And then last question that Jen had was she's heard mixed things about writing off a home office on your taxes. Is it worth the trouble or should we not bother?
Yeah. So again, I put this link in here in the chat. Download that list of deductions. We talk about home office in there. There's also a podcast episode. Let me grab that. Hold on. We went in detail on the list of tax deductions and what you can write off in your business. So check out episode 96. It is most definitely worth writing off of your home office. I do think it is a IRS audit, not red flag, but yellow flag, you know, not a complete red flag, but there's other red flags, maybe a little yellow one. And so we want to have, proper documentation. So for instance, this space in my home, like there's nothing else in this room except for my desk. Like this is my office. So I can legitimately write off the space. So it's a portion of my mortgage. There is a standard deduction now. So you can write off the standard deduction or a percentage of your mortgage, interest, utilities, whatnot. So if you don't have that dedicated space and you're just working out of your dining room table, I would not take the home office deduction.
Okay, perfect. And is it something that we can take yearly or is it just a one time as you set it up at the beginning?
Oh, no, it's a yearly deduction.
Okay, perfect. Yep. Just want to verify.
Just to get more specific, because you're here. If my home office also doubles as a guest room, maybe 5 times a year, does that count?
No, yeah, who cares? I used to have a bed in here. Yeah, doesn't matter. It's your dedicated space in your home.
Okay.
Again, the gray area is when it's, a desk in your living room and next to your kids' toys and the sitting room, and you're trying to take 50% of your biggest space of your home as a home office deduction when you're clearly sharing the space with your kids or with your family. You get it.
Question: what if we did get scammed, but we were purchasing something for our business? Would we get that money back?
Yeah.
If it was like a one-time thing.
So I use credit cards for everything. So if you hear me talking around my house, I yell at my husband all the time because he uses a debit card. I'm like, stop. There's zero protection. So I use a business credit card or a credit card, both personally and for my business for every single purchase. Both American Express and Chase are Capital One. All of them are amazing. That if you have a vendor that ended up being a scam, you just call them and dispute the transaction and they will refund you. They'll put a refund on your statement.
I think we're good, Danielle. Like, that is awesome. Thank you so much for answering our tax questions and accounting. And because we're all so confused about this.
Yeah.
As business owners.
I totally get it. I've heard it all. I understand, like I said, as a business owner myself, I am right there with you guys. I understand how confusing this is and how many decisions that we have to make every single day. So you have my email address. Any questions come up, shoot me over an email. I'll cover them on the podcast, and we're happy to be a resource for you. So if you, we are accepting clients for the 2023 tax year. So if you need help with your bookkeeping or taxes, again, happy to be a resource.
Awesome. Thank you for joining us on this episode of the Pro Organizers Coach podcast. If you've gotten any value from today's episode, be sure to subscribe to our podcast and leave us a 5-star review on your favorite podcast platform. It really helps us grow, and it warms my heart to hear from you. And make sure to stay connected with us on socials at Pro Organizers Coach. Then go to proorganizerscoach.com to find all the ways that we can help you succeed in your business. You have the power to make a difference in people's lives through decluttering and organization. Keep honing your skills, embracing those challenges, and fostering connections within our organizing community. Progress will come with every step, so keep pushing forward and you will achieve your dreams. Girl, you've got this.